I think there's few things you need to think about. From a GP perspective, it's really doing the background checks on some of these partners. What properties do they have? How much do they have in loans? You're able to do these background checks. So kind of focusing on that. When some of these operators talk about the full cycle, I think it's taking it to the next level. Great that you did full cycle, but how did you truly increase the value of the projects that you did? Was it just because the market was so good if you purchased in 2019 and sold it in 2022? You didn't have to do anything, if really much, right? So really taking that next step in digging.
Hi, folks. My name is Akash Jain. Welcome to the NextGen WealthCast show. I'm excited today to welcome Divya Smith to the show. Welcome, Divya.
Thank you so much, Akash. Great to be here.
Great to have you today. Hey, Divya, to start us off, tell us a little bit about your background and what's your why.
Absolutely. So my background, I'll try to summarize quickly, but high level, I've been a technology executive for over 20 years. About 4 years ago, decided to jump into real estate. Started my own company. So that's been really fun. And then my why between all of this is as I ran large teams. So I worked at many different large corporations like Target, United Health Group, Hilton, US Bank. I launched big products, had big teams, had upwards of 200 people reporting to me at time. But in all the space, we really never had time to figure out how to invest differently or how to really take care of our financial, picture. So that really became my why and purpose as I learned about it. All my teams, all the people who were working with me, we all working 40, 50, 60 hours at times, and we don't have time to even understand how to take care of our finances so that at some point of time in our life, we don't have to work this many hours. So for me, that was my purpose when I started Ascending Avenue, is to really think about how can we kind of take it further, but then also help people who are just busy as we are.
Very cool. Hey, I've heard you talk about a life of abundance as well.
Yes.
A lot of people don't understand what that means. If you can
Yes.
also
Yes.
enlighten a lot of our investors about what you mean by abundance and how you are, you're living that life.
Yes, thank you so much, Akash, for asking that. And I feel like it's such a, and maybe it's a phase of life, but I feel like you get to a point in life, you realize, yes, I can continue to make more money. But really, abundance is all about thinking, do you have enough of what you need? But then also thinking about what makes you happy. There's plenty of good things out there. I think sometimes we focus on what we don't have versus what we do have. And one of the things, especially, with my background, so being Indian, I think I grew up with that mindset, keep having more, keep doing more, keep saving, keep doing. And of course, like my grandparents and parents kind of come from that depression era. So there has been a little bit of flavor of that saving and just not using and being happy with what you have. So that really has shifted my mindset where I talk to people and friends to say, what do you have? Is it enough for your life? Do you need to work 50, 60 hours? Or can you work part time, but still really enjoy your time with your kids, with family, do things for your health? So, really, abundance is all about all aspects of life, not just, focusing on one, which is career, which I know was a necessity at one point in time. I think it begs the question, is it still?
No, that's a great thought process, Divya. And hey, from my perspective, the way I look at abundance is about sharing. Sharing not only, hey, with money and finances and giving, but it's also sharing your knowledge, sharing everything that you have. Hey, whatever you learned through hey, your education, or not only like even with this what we are doing right now, talking to each other about some of the nuggets that we have learned in real estate,
Yes.
sharing that with people, sharing our learnings so that other people can learn from our mistakes.
Absolutely, absolutely. I think abundance goes beyond just the word, you're not looking to be like other people. Let's realize what we have and share that knowledge and wisdom with everybody around. I love that.
That's amazing. So the name of my fund is multi-asset generational, and
Okay.
the intent is to create generational wealth while investing in alternative asset classes, multiple different asset classes, investing, diversifying, into various different asset classes. I want to understand from you what are the few asset classes, if you may, that you're focused on?
Yes, of course. So for me, I got in this space and I had to realize I think we all have a personality and a mindset. So I don't like risk as much. So I've kind of decided to, stick with pre-existing built investments. So like multifamily that already exist and truly going in spaces where there need updates and there will be an incentive to be able to increase those rents to be able to give returns to our investors. So primarily what I've focused on is multifamily investments, usually class B to class A. Class C is a whole another ball game that I have not gotten involved in, but class B to class A multifamily projects, hoping for investors to come in and be able to double their equity, and that's really generally what I'm looking at.
So, are you a sponsor yourself, or are you typically capital raising? How does that work with your team?
Yeah, so similar to you, Akash, with what you mentioned, is it's a fund manager sort of role. So for me, I do like to do my own due diligence in addition to the partners I'm working. So for example, I have this newest opportunity I'm looking at in Dallas, went and visited the property, walked around it, kind of talked with people and even the tenants who were walking in and out as I was, going through my secret shopping. So I do kind of all of that and that's when I bring it to investors. But yes, I work with partners who are operators who are also kind of in-house property management and construction because for me, I think that's made a big difference.
Got it. And how are, obviously walking the property, touching, feeling, smelling the property is one thing. But what about how do you vet your sponsors? What are the few things that your LPs, my LPs, our LPs should be looking at when they are investing in either our funds or looking at the underlying sponsors?
I love that question, Akash. And I wish more and more partners, active or passive, so either LPs or GPs. I think there's few things you need to think about. I think from a GP perspective, it's really doing the background checks on some of these partners. What properties do they have? How much do they have in loans? You're able to do these background checks. So kind of focusing on that. And then, when some of these operators talk about the full cycle, I think it's taking it to the next level. Great that you did full cycle, but how did you truly increase the value of the projects that you did? Was it just because the market was so good if you purchased in 2019 and sold it in 2022? You didn't have to do anything if really much, right? So really taking that next step in digging. So that's from an active investor or GP perspective. From an LP perspective, as you're working with these partners, there's three or four things I would want to ask. What is their experience? Truly have they done full cycle? If so, in what specific market? Second would be is how have they handled some of these big blunders? And I just call them blunders that have come, in the last 3, 4 years. We couldn't have imagined like interest rates increasing the way they did. We could not have imagined the property taxes the way they increased. We could not have imagined insurances increasing the way they did. And then on to top, like the fourth thing which I talk about is rent, like the occupancy rates and the rent growth dramatically dropping. So those are the four big things that all could have happened, did happen in the last 3 to 4 years. So asking, your partners, people you're sponsoring with or you're looking to invest with, how are those four things handled? Did they handle the insurance cost well? If so, how? How are they projecting their pro forma for next 2, 3, 5 years as they bring in these new investments? So ask questions about all of those four things, really dig in. And I think those are the some of the questions I would ask.
Very cool. So, hey, talking to you almost feels like, hey, the investing 101, hey, talk about what are the market dynamics as well as what are these partners looking at. Great. Now, what about interest rates? How are you managing the interest environment? Again, being this is 2025, what does your crystal ball tell the investors?
Yes. Interest rates are hard. They are hard right now. So to make any deals possible, and oh my gosh, you're probably feeling the same pain, right? The to make and these interest rates work is hard. But a lot of people, especially in 2022, maybe even early, I don't think it's early 23 because the interest rates had dramatically increased by then already, but they had done variable interest rate without rate caps. Those kind of went under pretty quickly. Now what we are seeing is people who did do the variable interest rate, floating interest rate, but then did rate caps. Those rate caps came due 25, 24, and 25, maybe 26. That's the pain we are feeling right now. Now, if they didn't have enough reserves and if their operations were not good enough to feed additional money in the reserves in order to buy that new rate cap, That is where the concern is. I don't think anybody in 2022 or 2023 would have said, hey, like, let's do fixed rate. Like, that was not a thing. So I think we have to be realistic. Like, you can go back and change the mindset 3 years ago. But of course, if you're looking at investments now, I think it's a good time to say, what do fixed interest rates? Can we do it? Does it make sense? And I think it's also a reset time for all our investors to say, let's think of it long term. We made short term returns great, but I think we need to kind of push it to long term thinking of 3 to 5 years, if not longer at times. And what do returns look like? So that's how I look at the interest rate picture. I think it does come back to being a little wiser than we were maybe 4, 5, 10 years ago, with interest rates kind of where we are.
Very cool. No, hey, that's some good philosophy around that. You know, hey, one of the things that I love to do is I love to travel. That's my passion. Hey, talk to us a little bit about Divya. You know,
Yes,
who is Divya? Give us a little bit into peek into what are your passions.
love it. Okay, so I thankfully have settled in few now. I used to kind of dabble in many different things, but I love to travel as well. So we actually just got back from Vancouver in Alaska last week. So we did a cruise there and then came back. But specifically travel, my mindset comes to hiking. So I'm traveling to these places with the goal of wanting to hike, certain mountains. And again, I'm not doing like a rugged, all like 45-degree kind of mountains either, but this is like 3 to 4 miles uphill. I do it along with my kids because that's going to be one of the legacies that they're going to remember for me. So I do that. I also do CrossFit. So that's really fun. I like just the intensity and power it brings me. It kind of reminds me that my body is more capable of than I'm willing to let on at times. So love doing CrossFit, hiking, traveling, and then I'm starting to see if there's space for other things. So you mentioned travel. I'm actually traveling to Costa Rica for a month, but I'm going to work out of there. And my goal is to see like what does that rugged life look like, along with day in day out hiking, but not having access to all the modern things that we have. So it's going to be very interesting, to go there.
You'll still have your phone and your internet, right? Hey, that's all
Yes,
you need these
exactly,
days.
exactly.
No, we just got back from Hawaii last week, and last month we were in Italy. So no, I love to travel. Right, let's get back into hey, the thick and thin. So
Yes.
again, Hoy, you've been investing for the last 4 years. A few nuggets, hey, a few nuggets for our investors. What are the things that they should be looking at? And hey, everybody's sitting on the sidelines right now, sitting on the
Yes.
sidelines, looking at the interest rates, looking at the market. It's a very, very volatile market. Looking at the current administration and the ups and downs with that. Oh, hey, what is your few nuggets for the people sitting on the sidelines?
Great question, Akash. And I feel like when there's volatility, when there's uncertainty, that's when all the smart and the wealthy people are making their moves, and they're started to make already some of these moves. People who, and I used to be in that camp where you want things to be stable before you start investing. I think that's where you've kind of lost, like the boat already. So for me, like last year, we closed on 4 properties. This year, I'm working on my second one for the year. Hopefully, we'll get through one more. But really, we are finding deals that didn't exist even 2 or 3 years ago. We are finding the prices that are lower than they were in 2022 when they sold. So it's a tough space for some people, but if you have money sitting on sideline, this is when it's time to get in because it is at the lower point. The uncertainty causes a lot of people to freeze. But when a lot of people are freezing, that's when you want to take action because that's what's going to set you apart.
We are seeing a lot of great deals come to market, a lot of great deals with a lot of amazing basis. People
Yes.
are just giving away the properties because they got into bad deals at the height of the market.
Mm-hmm.
Hey, that's opportunity for a lot of the people sitting on the sidelines. That's an
Agree.
amazing, amazing advice.
Yes. Thank you.
Another question, Divya. Hey, if you were to be in a karaoke bar, what would be the most favorite song that you would have from a Bollywood or Hollywood movie
Oh
that
my
you'd
God.
sing to?
I don't know if I would sing, but I will dance to it. So I will let people who are good at singing sing. I'm good at dancing, so I'll bring the moves, you bring the song.
All right, what song would that be?
Oh gosh, there's so many songs. I don't know. I'm a very flexible when it comes to music. So any music, all music will do. I love Bollywood songs, especially to dance. So like any of those new numbers will do.
Very cool, very cool. No, hey, us Indians, we do love Bollywood.
Yeah.
So hey, if at any party it was Bollywood, all of us would be up there dancing with their
Yeah.
bhangra moves.
Yes, agreed, agreed.
Another question around the technology. So hey, I believe you have been in the technology space in your past life.
Mhm.
With AI coming to the forefront, how do you think that is going to change us as investors? Not only us as investors, but also us as GPs.
Yes.
What is that bringing to the table?
There's two aspects to it. I think AI will help us kind of do some of our administrative tasks a little faster. We may not need even the virtual assistants that we have used in past as much as we needed to. So I end up using even certain tools. I have like three or four tools that I end up using. Of course, everybody uses ChatGPT. I know I mentioned ChatGPT, but I feel like even people are not using it enough. So there's many applications of it. So again, how you use it, how well you've trained your model, so that's important. There are plenty of other tools I use. Even Circle Back for my meetings. So it's another like note taker, and that's been huge for me to be able to kind of go into some of these meetings, be able to use those. So I think those AI will help us kind of continue to do some of those administrative tasks. Bottom line, Akash, the relationships, that's not going away. End of the day, we are humans. We are people. We need connection. We need energy in person, or face to face viewing each other. The conversation you and I are having, I could never have this conversation with an AI. That's not getting replaced. So I think in our business and in most businesses, relationships is what's going to matter the most, and we need to continue to cultivate those.
No, I think, and especially in our investing world, right? People invest with people. People don't invest with even invest with companies. People invest with people. People invest on trust.
Yes.
That trust cannot be built just by using AI. Yes, AI can assist us in setting up the meetings and taking notes and creating beautiful decks and pitches and whatnot. But until and unless you and I have this conversation, I'm not parting away with $100,000 into your deal.
Exactly. Couldn't agree more. Couldn't agree more.
Great. Hey, parting words of wisdom for our investors.
I would say do your work, do your homework. And actually, yesterday I had conducted a session and I talked about fear. Don't let fear be the reason you freeze. Fear is there as your GPS re-guide. So it's basically helping you think about things differently. Fear has its role. It's helping you ask good questions, but don't let it freeze you.
Amazing, amazing nuggets, Divya. But before we go, I'd let you put a plug in for your latest deal if you want to have a shout out for that.
Yeah, so I can only share high level because again, this is a deal where I can't share publicly, but it's a brand new deal. We are just starting out in Dallas. It'll be probably available to our investors in next couple of weeks here. So if you already know me or want to learn about our future deals, happy to kind of chat with you on it. But we are getting very good cost basis on this one, 30% less than what they bought it for in 2022. So again, like you mentioned, it's a good deal, good cost basis that we are finding now. And I like the deals where you get to go in and update the place because the last owner did not take care of it. It's funny, it's opposite of how we think of our housing situations. Like, oh, the last owner didn't take care of the house. I was like, no, 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 I want that. So I can go in and update it. And that's how we're going to, give good profits to our investors. So that's our newest one. It's about 240 units.
All right, guys, you have it. Please look up Divya and ping her and get in her new deal. Thank you, Divya. Thanks a lot for getting on the Next Gen WealthCast show. Thanks a lot.
Yes. And thank you so much for having me. Great conversation, Akash.
Thank you. Always pleasure. Thank you.
Thank you.